Hello again. Welcome to the week ahead with Alpha Wave Trader. Today I just wanted to focus on a stock, really to give you a bit of an insight into how I'm looking for opportunities and how you can possibly start to see where you can find good risk-reward trades on things. Often I think people try to join already existing trends, and I really quite like looking for situations where there's been a large shakeout of positions and finding a shift in momentum, and then looking for really good entry points once I have indications that momentum is shifting in a stock. And a good little example of that is here in Monash IVF. So I just wanted to just give you a quick outline so you can sort of start to see how I sort of view opportunities. So hopefully it can help you in your trading. So if you look at Monash here, this is actually a quarterly chart. So every bar here is 3 months trading. And I don't think a lot of people look at quarterly charts, and they have a lot of information that you can't find in the monthly or weekly charts. They can really give you a good sense of big picture moves. If we just analyse, what's happened since listing in 2014, you can see it actually had a bit of a rough trot, selling off when it first listed, creating a sell pivot there initially, and then not managing to have a buy pivot until late 2015. So this was all pretty much saying trending down. There's your buy pivot and a bit of a sell-off, retesting. That can create great opportunities. And there it is, rallying higher. And then finally, after lots of work and volatility, we have the sell pivot, which occurred in 2017. And from there, you can see it's sold off a long way, and now on my quarterly scans it's just come up with the quarterly buy pivot there. So just from that very simplistic point of view of watching those pivots to get a sense of shifting momentum, you've got some pretty early warning signs that things weren't looking too good. And here we are with the first quarterly buy pivot for, a few years. And what I especially find interesting is the quarterly buy pivot is happening after having a false break of the all-time low. So you have the lowest price achieved there in July of 2015. Then many years later, we've had a big rally. So a lot of people would have bought it on this big rally. And I assure you, a lot of stop losses would have gone off once prices went back below the low of the whole move. So pretty much everyone who bought this stock since the listing, all these people were out of the money and probably getting a bit stressed when prices were breaking down below that lowest price in the whole move since listing. And so once that's happened, and you've had a big clear out of positions, and then we see this big shift in momentum with a big quarterly buy pivot occurring there, that's not a bad little indicator that there might be a shift in momentum occurring in this stock. And the way I'd look at this from here, now that we have this very clear wave from the highs around 250 odd down to 90 cents, I can now make calculations off that wave, and I can create a target back to that point of control, which is the midpoint of the wave. I'd say we're going to ultimately get there. I'd say a target towards 170 in the short term is a fairly good chance of happening, but before that happens, it may thrash around a bit, and you'll see in this last buy pivot, you can see this price action on this candle how it's sold off down into the guts of that buy pivot candle before taking off. And that is where you can find opportunity because you've got the indication of the shift in momentum with that buy pivot. So then you want to be waiting to buy on the sell-off back into the range. And if we look at it where we are now, you can see I've got these lines here, which I call the buy zone of the wave. And up here we've got the sell zone of the wave. So the real opportunity is on a sell-off down into this area. And I won't give you the actual calculations for where I'd exactly buy it. But I can tell you that it would be based on whatever wave is created now. So the high that is created, once it sells off, I will have calculations looking for a good spot to buy, aiming for a target back to that midpoint of the whole wave initially. And quite clearly, if prices crash below the lows created at the end of last year, below 90 cents, then things aren't looking good at all. And you wouldn't want to stick around in this stock if you saw it busting down below those lows now and really causing a big shift in momentum back to the downside. So from that point of view, you've got a pretty clear line in the sand for where you're wrong. And so the cheaper you can pick the stock up from here, now that we have that confirmed shift in momentum after the false break of the all-time low, the better your risk reward is based on this target back to the midpoint. And look, ultimately, after doing a bit of work and maybe hitting that midpoint, it could ultimately be heading back to that sell zone and possibly higher if the business is really shifting momentum. And look, I quite like the whole IVF story long term, and I think there's been some structural problems in the market in the last few years, but I think really long term it's not a bad industry, and I think it's got to see more growth. So ultimately I think this business should turn back up, and you'll have to look at the figures and get a sense of what the fundamental situation is for the stock. But this was just a really good example for you of seeing these waves which can be defined in the big picture by these pivots, and then looking for opportunities once you get the hint. And I'm not necessarily buying it right here. This is not a recommendation to buy it, because imagine if you bought it right here at 144 and your initial target is 170. That's not a big gap, especially if you're not going to stop out until it gets below 90 cents. So that's not a really good risk reward to try to make this much, but you're risking this much. So really that's not a great trade. You could ultimately say that I want to see it get back to 210, which is the sell zone, which is fine. So if you were to look for that trade to try to make that much on your initial wave where you take part profit, that's a bit better. But right here, you do need to risk 50 cents on a $1.50 stock to really be sure that you're not just getting shaken out by a small wave to the downside, because you could buy it here at $1.44 and we could easily sell off back to $1 and still be heading higher. As long as it stays above that 90 cents, it can do whatever it likes. And the market moves by shaking people out of their trades. So I wouldn't be surprised at all for prices to look like they're selling off again before heading back up. So you have to be able to withstand that volatility. And you need to make sure your stop loss is at a point where you are proven wrong. If you buy and then you just say, I only want to risk 30 cents, But the point where your stop loss is at a point where you're not really proven wrong. That's just going to end up with all sorts of problems. So you have to make sure your stop losses are set based on the structure, and that they're at a point where you are definitely proven wrong. Which is why, for me, from here, I'm not necessarily buying right at the current price, but waiting for a good opportunity, which is probably going to be within the buy zone of this whole wave down. So hopefully that does make a bit of sense to you if you've been watching these videos, and it gives you a sense of how you can look for good risk-reward opportunities. All right, cheers. I'll come back with more next week.